What if I told you one person's wealth could be bigger than the entire economy of most countries? What if you could learn how that happened and, more importantly, how to avoid the traps that nearly broke him? By the end of this story, you will finally understand why Elon Musk's wealth swings wildly, how psychology drives financial outcomes, and the money behaviors that separate those who build legacies from those who bleed cash fast. This isn't about worshiping wealth. This is about decoding the math and mindset behind generational success and showing you how those same principles can work in your life, whether you're earning $40,000 or $400,000 per annum, or trying to protect the wealth you've already built. What you're about to hear will feel like a cinematic journey because it is one. Hello, I'm Mike Storywell, the true money storyteller. Welcome to Smart Money True Stories, where I share real money stories that teach you how to build wealth, escape traps, and make smarter financial decisions. Elon Reeve Musk was born on the 28th of June, 1971, in Pretoria, South Africa, long before Tesla or reusable rockets ever existed. At age 12, he taught himself programming and created a video game he sold for $500, his first taste of earning money, not spending it. But Musk's life wasn't cushy. Bullied at school, family tension at home. Yet even then, he showed two traits every wealthy person share: curiosity and persistence. He moved to Canada at 17, then to the United States, earning 2 bachelor's degrees, one in economics, one in physics, before dropping out of a Stanford PhD program to start businesses. Why is this important? Because wealth isn't just about earning. It's about building optionality and creating leverage when people do not see it coming. It is about seeing paths and opportunities where others don't. Musk's first company was Zip2, an online city guide for newspapers. He later co-founded X.com, which became PayPal, and when eBay bought it in 2002 for $1.5 billion, Musk walked away with about $160 million. Some people think wealth comes from luck, but it really comes from positioning yourself to receive consistent passive cash flow, either from your businesses or intellectual properties. With his first big exit under his belt, Musk should have relaxed. Most would. Most do. But Musk did something rare. Instead of locking in safety, he bet it all on risky ventures, specifically SpaceX and Tesla. Think of this decision like investing your entire portfolio in a startup when most people barely max out their retirement savings account. That's creating leverage, not just financial, but psychological. SpaceX aimed to make rockets cheaper and reusable, a goal experts said couldn't be done. Tesla aimed to make electric cars mainstream when the industry was convinced EVs were a fad. Risk like this can destroy you or make you historic. It's called asymmetric payoff, where the upside dwarfs the downside. And Musk's gamble worked. Over time, his wealth didn't trickle in, it exploded. By late 2025, Elon Musk's net worth didn't just climb, it shattered records in the history of wealth. Over decades, many titans of industry built massive fortunes, but no one had ever reached the heights Musk did. According to the Bloomberg Billionaires Index and Forbes data, Musk's net worth first crossed the $600 billion mark, making him the first person in world history ever to hit that level, a milestone more than any individual had ever achieved before. But then something extraordinary happened. In the final weeks of 2025, his total estimated wealth grew even higher, with some major wealth trackers, including Forbes, placing his net worth near or above $700 billion, following key events that reinstated large Tesla stock awards and significant increases in SpaceX's valuation. To put this into perspective, $700 billion is more than the annual economic output of many nations. In raw dollars, this staggering figure dwarfs not just the fortunes of other billionaires, but also the GDP of entire smaller economies. Musk's accumulation wasn't a slow climb. It was a compound acceleration fueled by equity stakes in high-growth ventures like Tesla, SpaceX, and his emerging AI and tech ventures. What makes this leap even more remarkable is that most of Musk's wealth isn't in cash. It's in ownership of future-oriented assets, meaning his fortune is intrinsically tied to the expected long-term performance of the technologies he's building. That's why his net worth can surge dramatically in a short period, and why it's still widely debated how far it could go next. In short, Musk isn't just the richest person ever, he redefined what personal wealth can look like in a world where technology, exponential growth, and forward-looking valuation intersect. Let that sink in. His personal wealth is larger than the GDP of some countries. But here's the twist many miss. Let's pause and talk about compounding, the single most powerful force in finance. Most people think compounding is about interest in a bank account. But real compounding happens in business value, equity, growth, and ownership stakes. Musk owned chunks of companies early and held on. He didn't cash out when Tesla stock doubled, tripled, or even when it looked like a once-in-a-lifetime windfall. Most investors see green and think exit. Musk saw a green light at the end of the tunnel. When the stock climbed past twofold, it felt like validation. At 3 times, it felt like genius. At 4 times, it looked like the rational moment to sell, rebalance, and protect gains. But rational math is not always optimal math. Optimal math sometimes means letting compounding finish its sentence. He treated equity like ownership, not inventory, because owners don't just trade assets, they hold influence. He understood that capital scales differently when you stay invested long enough for markets to reward conviction more than timing. Volatility didn't scare him. Premature exits did. Selling early protects emotion, holding long protects net worth valuation. That is how $160 million stopped being a milestone and became a mechanism. A mechanism that multiplied influence, borrowing power, equity leverage, and long-term wealth identity. Wealth that eventually flowed into history. But compounding doesn't just occur on the upside, it works in reverse too. Remember this: liabilities compound faster than assets if you're not careful. Debt you don't manage grows. Minimum payments on credit cards balloon. Lifestyle inflation eats cash flow. Opportunity cost silently kills wealth. That's why so many people feel stuck. Even when they earn more, they're trapped by the illusion of progress, while liabilities compound beneath the surface. Musk's story teaches us this: put your money where growth compounds, not where consumption compounds. Quick question for you: have you ever felt lifestyle creep impact your cash flow? Comment yes or no below. Before we go further, smash that like button if you want more stories that break down real money stories using real heroes like Elon Musk. Most people only associate Musk with success, but that's only part of his financial narrative. Public statements, controversial moves, and market reactions have literally wiped out tens of billions of dollars in wealth in a single day. Imagine losing $34 billion in a day, not because of bad trades, but because the market reacted to your words. That's the brutal reality of market psychology. In finance, your voice matters, but it also has a cost. And this cost isn't just emotional, it's measurable. Net worth isn't cash you hold, it's the value other people assign to what you own. When confidence drops, value drops. Here's the finance lesson: wealth isn't just what you hold, it's what others think it's worth. That's why behavioral guardrails are essential, not just spreadsheets and calculators. Great investors don't just manage money, they manage perceptions, timelines, and expectations. Musk learned this the hard way, and so have many others. It's not about avoiding risk, it's about steering it. What's one financial habit you broke that changed your life? Tell us in the comments, let's learn from each other. And if this story is helping you rethink how money really works, hit subscribe now. We post real finance stories every single day that could save you money or make you money. Let's switch gears. Tesla, SpaceX, PayPal, these are companies. But Musk's true advantage wasn't capital, it was identity. Most people grow up thinking money has 2 jobs. You either spend it to enjoy life or save it to feel safe later. And that's where the story stops for them. Money, in their mind, is a reward for working hard or a shield against bad days. So, when they earn more, they upgrade lifestyles, buy comfort, and stack savings slowly, believing they are doing everything right. But the wealthy see money differently. To them, money has a 3rd job, the most important one: deployment. They treat money like a worker, not a trophy. Instead of asking, how can I use this to feel good or secure? They ask, where can I send this so it comes back with friends? This is what separates linear earners from legacy builders. Wealth isn't powered by how much you earn, but by how much you put to work in systems that grow businesses, assets, ideas, and opportunities that multiply. Spending and saving are useful, but they don't scale you. Deployment scales you. The wealthy don't fear letting money leave their hands because they built the runway for its return. Others hesitate, hoping money stays put forever, unaware that idle money gets overtaken by inflation and opportunity cost. The winners don't just earn money, they circulate it intelligently, directing it into compounding engines that rewrite ownership over time. That's why leveraged positions, owning assets that grow, beat leveraged consumption, buying things that lose value. People who retire wealthy track their monthly income. Musk saw money as a force that could shape the future, not just a means to comfort. This mindset shift is where financial identity resets happen. Instead of asking, how much money do I have? Ask, how many future earnings does this position generate? That mindset is what allowed Musk to bet on futuristic, uncertain ventures and win. This is the same principle elite investors use. Focus on expected value. Minimize negative compounding liabilities. Prioritize earnings potential over instant gratification. That's how real financial progress gets made. So what do we learn from Elon Musk's story? Wealth isn't earned by accident. It's created through vision, persistence, and strategic deployment. Money doesn't ignore behavior, it amplifies it. And leverage, when used wisely, is a force multiplier. Most people treat net worth like a final exam score, something to check occasionally, compare with others, and feel either proud or disappointed about. It's a number they hope will go up, a scoreboard they refresh like sports results. Elon Musk saw net worth through a completely different lens. To him, it wasn't a score, it was a tool for leverage and influence. When his companies grew in value, his net worth expanded, not to inflate his ego, but to amplify his ability to shape industries, attract capital, move markets, and negotiate from a position of strength. This mindset is what separates spectators of wealth from architects of power. Musk understood early that money gains its true force not when it sits in a bank, but when it changes the behavior of systems and people. His wealth became a signal that pulled in engineers, investors, governments, media attention, partnerships, and public trust, even when outcomes were uncertain. That's influence compounding on itself. And compounding works both ways. When confidence dips, the number swings, sometimes erasing billions overnight. But even those drawdowns still served his purpose because they revealed something deeper. Wealth is emotional capital as much as financial capital. Musk didn't chase net worth for applause. He built it to move the world in his direction. That's why his story isn't just about dollars or valuation. It's about the ownership of attention, narrative, and momentum, things that outlive any bank balance. The scoreboard tells you who won. Influence tells you who changed the rules. Now, I want to hear from you. I need you to do something for me. Predict your 2026 money habits in the comments section, not your goals, your habits. Because habits shape outcomes far more than goals do. And before you go, subscribe if you want real finance stories every single day. Stories that change how you think about money, risk, and success. Now you need to know this. Your understanding of the subject of money shouldn't just be about saving. It should be about thinking bigger than your bank balance and being smarter with every dollar. Your financial future won't be decided by luck. It will be decided by what you choose to understand and what you choose to apply. Subscribe, like, and drop your comment. Catch you in the next story.